Welcome, dear viewer. We are honored that you have chosen to watch our recording as part of the on-demand streaming of the Financial Inclusion Week 2023. My name is Christine Berger. I'm a project manager at the Global ISA Alliance. In this recording, I would like to bring to your attention the work of the Global ISA Alliance and the work of the income share agreement providers, highlighting the possibilities and the need for ensuring ethical student finance. The Global ISA Alliance is an international network of selective ISA providers who are united by a commitment to providing this ethical student finance through income share agreements, also sometimes known as future earning agreement. In 2023, following on 2 long years of discussion, the Alliance was launched with the purpose of ensuring that ISAs are embedded in a principled and ethical framework. You can imagine the scope of the work that went before. You see, as the ISA system is a relatively young model and there is a lack of regulation and transparency in its market, the model is opened for the potential of many predatory practices. Our alliance, this alliance that we've created, is a space for collective action and setting standards and regulations to ensure an overarching ethical framework, as I've mentioned before. You can go to the next. How does this alliance work? You can see here that we have the alliance overarching that is based on 3 pillars. We have a community of practice. We promote the ethical ISAs through developing standards. And then we also focus on policy and research, stakeholder engagement, regulatory alignment, and how we are presented on the global forum. Through these pillars, we try to create this framework for ethical student finance. And our beneficiaries are not only the ISA providers, the funders, but most importantly, the students. For ultimately, they are the focus of our work and everything that we do. You want to go on? Now, you must be asking yourself, what is an income share agreement or an ISA, as we refer to it? I'm going to just read this definition because arriving at a collective definition has taken up some of our time. An income share agreement or an ISA is a financial structure in which an organization provides financing to a recipient to cover their investments in education, training, and other ways of learning. That's important to note that we do not only focus on tertiary education, but that other forms of education also taken into consideration. An important aspect of this education is that it leads to income generating potential in the future. And then once this person has arrived at the point where they are able to create an income, they commit, or they have already committed, to paying a certain percentage of this income that they now have. I need to redo this. The amount paid by the recipient in the end can result to be between 0 if the receiver never has an income, and typically a maximum threshold. Many questions always arrive when speaking about this maximum threshold, or what happens if someone doesn't work. That we will explain in our next slide. I'm going to now ask the chairman or one of the chair people of the Alliance to briefly explain some of the typical features of an income share agreement within the framework of general student financing, for example, a loan or a scholarship. Batya Blancas.
Thank you, Christine. I think what makes it really helpful to understand income share agreements is to really compare it to the other options for students on the market. And so I'm briefly going to touch on the fact that we have loans very often for students, but not in all regions, and sometimes also scholarships. I think the key feature with an income share agreement is the fact that it doesn't necessarily require someone to pay collateral based on an asset. Sometimes there's a social collateral that's required, and some sort of credit history. But generally, it gives access to young people who don't have asset-based collaterals. The other aspect about an income share agreement, which is very unique, is that it adjusts to income, right? So as a young person who's graduated from college or a course, and you may be the first person in your family to have formal income, the repayments on an income share agreement is income-based, which means that you aren't overburdening young people with high repayments that creates over-indebtedness or unethical lending. There are a whole host of other features on this slide, but I just wanted to highlight those 2.
Okay, so we can say in summary, income share agreements promote financial inclusion by breaking down barriers to education, offering a more flexible and accessible way for individuals to invest in their own skills and in their future without the constraints of traditional lending. Now, due to this system being so young and there being a lack of regulation, as I've mentioned, the Alliance is there to ensure ethical student finance. And what better way to get a feeling for what ethical student finance truly is than hearing about true life stories and the work that is done by the people that provide these life-changing ways. Our first case study and presentation will be from Felipa Vergara, who is with Lumni, one of the longest standing ISA providers, and they primarily work in Latin America. Felipa, the floor is yours.
Thank you, Christine. I want to tell first of all the case of one of the students that we have funded. Her name is Gisela, and she's from a small town in northern Colombia, close to the Caribbean Sea. Gisela was the first person in her family to graduate, to go to college, and she actually studied engineering. And she happened to graduate during the COVID pandemic. So it was really hard for her to find a job and also to stay in her small town. At the moment we met her, and she had decided to study coding, to participate in a coding bootcamp. So we funded her through one of our coding partners and schools. She finished successfully the program. She then found a job remotely working from her town, and she joined a Colombian startup. It was a small company, and now she has just completed her first year in the startup, and she's making approximately $9,000 per year, which is actually 3 times more than the Colombian minimum wage. Actually, Colombia is a country where a lot of people earn less than the average minimum wage. So she really could make a significant improvement in her life opportunity. Basically, in the agreement, she just had to pay a small proportion of her income for a fixed number of months. And she finished paying this income sharing agreement after that number of months. Can you go to the next slide, please? I want to talk now about Lumni. Lumni has been working for a little bit more than 20 years in Latin America, and we have funded more than 18,000 students. We have funded them in about 75 different funds and vehicles, and have deployed approximately $75 million to fund those students. Something that has always been very important for us has been to put the student at the center of our process. And we have had the opportunity to fund mostly students from very low income and middle low income background. Those represent approximately 96% of the students we have, of the 18,000 students we have historically funded. Close to 50% of them are women. We've graduation rates have been approximately 8%, which is about twice the average graduation rate in Latin America. Unemployment rate formal employment rate has been 74% in a region where informality for young people is very low. And we've been able to serve students in 12 different countries in Latin America. So this is pretty much the story of Lumni, and I want to emphasize that helping students to improve their life standards, to take the risk of getting an investment, but improving their human capital and going for jobs has been at the core. And we have always found that income sharing agreements have been the most flexible and sustainable instrument to help the students in that transition to improving their opportunity.
Thank you, Felipa. Now, from the Southern Hemisphere, we move across still to the Southern Hemisphere, to Africa, where Batya Blancas does her work with Chanson International. Do you want to move on?
So very much inspired by the work that Felipe has done in South America. I went to Rwanda in 2017 and I met Alette. Alette is the firstborn in a family of 5 children in Rwanda. And her family did everything to ensure she could complete secondary school. And it was a big deal because she was the first in her family to do so. She comes from a subsistence farming household. When she graduated secondary school, she could not access higher education because they didn't have the collateral for a loan, and her family didn't make enough money to pay the interest on a potential microfinance loan. So Alette could not further her education, and her job prospects were limited. Actually, in fact, they were almost zero, and she was going to be working on her family's subsistence farm for the rest of her life. What Alette represents is 91% of African youth. we have had generations and generations of young people across the continent who've not been able to access education that actually leads to meaningful earning and helps to alleviate families and move them out of poverty. So these are the young people we work with every day. And the way that we do that is, maybe on the next slide, Mario, is through our income share agreement. So we launched in 2018 in Rwanda, and our core mission is really to increase the lifetime income of excluded youth by using this very unique financial instrument to help young people access education that leads to meaningful learning and that will then transition into earning. So we financed Alet's business diploma. It cost about $1,500 US. And when she graduated, that was about 18 months ago, she started repaying us once she was earning above a certain income threshold. So this is also the unique thing about an ISA, is that you can design it to ensure that a young person only starts repayments when they can really afford to do that. So Alet started repaying us when she was earning above $80 a month, which is 2 times the Rwandan median income. And she was paying 10% of her net income for 60 months. Well, she still is. Alet is having a very successful career, and we see her income growing from month to month. Overall, Chanson has reached, maybe on the next slide, I can just highlight that. Overall, we've reached about 2,600 young people on the continent. It's a drop in the ocean. There's a massive demand. And when we look at our application cycle, we're only reaching about 30% of the young people that need this. We have 935 graduates to date, and we can see that they're earning on average a 4 times median income. So you're really seeing young people transition out of very, very low income households into income ranges where they can start to support other family members, and they could hopefully lift their whole family out of poverty. We have a very strong gender lens. 68% of the young people that we have financed are women. 63 come from rural areas. As well as our very strong focus on exclusion. I think the best part, and this is what I love to say, is that African youth are investable. We can see that with our portfolio at risk, only 3% are in the 90-day plus risk category. Many of the microfinance providers told us we were crazy. And how can you provide uncollateralized lending to young people? Well, if you give them a really good education and they can earn more money, then they actually repay. And we've also seen that based on our projections, we're recovering about 37% more than what we had projected, which means that there's a very high solidarity and commitment element from the young people we serve.
Thank you, Bart. It was nice and touching also to hear about you speaking about the meaning for job creation. So one always hears about bettering people's livelihoods, the potential for earning more, but they may be doing work that might be more meaningful for them is also an important factor, I think. Now we move in another direction, further up north to Asia, where Mario Ferro and Wazer, one of our younger members, Mario is not younger, but his organization is one of the youngest members. Let's hear what you have to say.
Well, right. Thank you, Christine, for having me here and for organizing this and keeping it in tune, starting with the story of a person. And I met Perong in many years ago, a decade ago, and when she was deciding to study, she reached the university age. Her dream was to go and pursue higher education. Nobody in her village had done it. Her family was very skeptical about education. She just thought, oh my God, our daughter is going away. They were farmers in 2 hours outside of Phnom Penh. And so I remember in those days, I had to actually convince her family that getting an education was something worthy, and that their daughter could have been capable of great achievement beyond the small limit of the farm and their village. And so back in 2013, we signed the first income sharing agreement with Perong. It was my very first one. It was actually with another organization, not Wiser, but it was the first experience that we had there. And we knew that she was capable, but we had no idea would she pay back? Would she actually be able to find a job? And in her word, as you know, we're still in touch, we're still friends, she said that was completely that financing that we provided completely changed her life. Not only it helped her, get a better job than if she stayed on the farm, but really pursuing further education. And what she could have in her village really broadened her horizon. She started seeing herself in a different way. And now, not only she got a very extraordinary career, both in terms of income and in terms of leadership position. She's one of the youngest executive director of NGOs in Cambodia, invited to speak at the government very regularly. I see pictures of her in the media. It's truly remarkable that there's that version of life, and had that financing not happened, she may still be in her village growing crops on her parents' farm. And so the economics were pretty straightforward, and in many countries that are the fast growth that Southeast Asia is experiencing, the economics of investing in youth is actually pretty obvious. There's the concern that many have around risk, and we, and I think every other ISA operator is very much funding that. All these fears about these young people running away are completely unfounded. And as a matter of fact, we speak not so much of repayment. Instead, we do very much of paying it forward. And through their contribution forward, the young people that are now being funded are really making it possible for the next generation of students to be funded. And her life is being changed for the better. But we decided now to take this to the next level and started Wiser just over a year ago. Focus on the growth of income sharing in South and Southeast Asia, where roughly 50% of world youth is located. It's about 620 million people between 14 and 25 years old. And we look at ISA as a way of funding anything that is as close as possible to the job market. So vocational training, bachelor's degree, especially the last few years of bachelor degree, master's degree, and whatnot. In countries where there is the GDP growth, the average long-term GDP growth that many of those economies are experiencing, it's a pretty obvious. The economics is pretty obvious. Once get over the fear that this is uncollateralized financing and people are running away, which we're seeing nothing of a worry around. And so we see that there is growing demand for skilled labor precisely because the economies are growing, and there is a willingness from the people and ability to pay. Willingness because they're just, an average person is a good person if you give them a chance of doing the right thing, and ability to pay because there are jobs and incomes have experienced steady growth over the last few years. So we're still very small, but we work through a network of partners. And so we have a few contracts actually in 12 countries across Asia. We are finding that some are vocational, some are bachelor degrees. People are able to find jobs, I will say, sometimes even more easily than it will be in more advanced economies. And so for me, Asia is just very, very exciting. There's a lot of work to do. Scholarship and loans are not even close to support the need for financing for education that we see from the demand in the people and we can expect from the economic growth and the demographic of the region. So I think this is a very exciting time to be part of the income sharing and financing for education space. And I think it's only natural that the alliance is coming up just now. And so I think this is the right moment to work on financing for education through ISAs. And I'm very grateful that the alliance exists. Thank you, Christine.
Wonderful. Thank you, Mario. From these three case studies, these examples where you've each given us personal insights into people's lives, it's very clear that income share agreements do work. And from your figures and facts surrounding the figures, it's also clear that people are there and they want the income share agreements. There are, I'm sure, also challenges that each of your organizations face, not only with regard to the populations that you serve, but maybe also with regard to the authorities that also actually serve these populations. From that perspective, I can imagine that having an alliance with members from different organizations who all actually serve similar populations, even though they have different cultural and geographical settings. I was wondering what each of you would say you see as a benefit of the alliance. And I think I'm going to give the microphone to Felipe. Where do you see as a benefit of being part of the alliance for your organization and for the ISA community as such?
Thank you, Christine. Well, I think that all of us, in the end, no matter where we are, whether in Asia or Africa or in Latin America, we have the same purpose, which is to help people improve their lives through a better training and accessing jobs. And this is a process that usually takes time because if you look at the lifetime of a fund, even the funds that are shorter in span, for example, when we invest in boot camps, it might be 5 years on average, or 6 years. And other funds, for example, if you fund college, it takes longer. So I think it makes so much sense to share in a very open way all of your learnings with other people who are trying to contribute in the regions and have similar values. So I have found that the initial meetings that we've had at the Alliance have been great to transfer best practices, ideas, and find better ways for the system to work better, because this is a system where, first of all, you're thinking about the students, but you also have the education providers, you also have the investors, whether there are impact investors or there are donors or corporate or companies. So I think it makes a lot of sense. And on the alumni side, we're really looking forward to sharing as much as we can with our colleagues at the Alliance.
Great. Thank you. From your perspective, Batya, where do you see the benefits of having an alliance?
I'm going to be very frank about this. The tricky thing with ISAs is that they aren't, there's no clear regulation or guidelines on ISAs. And what this alliance stands for is for the ethical use of this very unique financial instrument that can unlock enormous opportunity. Now, we have seen some predatory practice in the space with ISAs. And I think the opportunity here is for providers that put the student or the young person first, and sort of the impact that Felipe spoke to at the center of their design, to come together and to make sure that we're all working towards that. I sometimes equate this to, the late 1980s, early 1990s with microfinance, and there was a definite need for the microfinance community to come together and set standards and create a framework for microfinance to work. And I think this is where we're at in the development of ISAs. And this is what the Global ISA Alliance can provide for the community. And then just to underscore everything that Felipe has said, there's nothing better than learning from peers and realizing that we're not working in silos, and that the impact focus is core to all of that.
Well, thank you. Back to Asia. What do you say, Mario? Where do you see a benefit for WASA with regard to the Alliance?
Well, as I was saying, it's a very exciting time to be part of the ISA industry, because in many ways it comes a long way, but in many parts of the world it's still very nascent. And so to me, there's everything that Felipe and Badia is very true, like the sharing of best practices, the work that needs to be done on regulation pretty much everywhere in the world is very important. To add the layer, I find that when you talk to students, to young people, for many of whom don't have very deep financial literacy. I mean, we're talking about sometimes 16, 17, 18 years old people for whom the conversation around their education is scary, like it was thinking about the future for all of us, and for whom conversation about taking a financial obligation of the size of funding the education. It seems like $2,000 may not be very much, but it's a lot of money in many of those countries. It's actually something quite scary. We are probably going to be the first financial product that those people are ever going to deal with. And the reality is that nobody knows what an ISA is. It's not as widespread as the word scholarship or the word loan. So one of the value that I think the Alliance can provide is actually of putting everybody together in one place, trying to really create an industry, a language, and trying to promote just the understanding of what an ISA is, that it's meant to be a good thing. And unfortunately, it's only the bad stories that go out there. And so I wanted to close going back to Batia's point of making sure that ISA is associated with ethical financing, with an understanding this is done for the student. There isn't anything, I think, at the core of the starting story for any of the organization that I know in this space, anything other than the desire of helping people achieve their dreams. And I think every student deserves to understand that, every parent deserves to understand that, every regulator needs to understand that. And something like that, it's something beyond what any one of us can achieve. And so the Alliance has this unique opportunity of being really catalytic for the whole industry.
Wonderful. Great. So as we say here, the dreams of the dreamers can come true. And we live in a world of systems, and financial inclusion is this whole system, or requires different systems to play together. And the Alliance, in its standing for ethical social finance, stands for a system that is ethical and is there to make dreams come true. You, dear viewer, I hope that the people that started watching this have come to the end or have been able to watch to the end. You, dear viewer, we are interested in hearing where you see our striving for ethical student finance fits into the bigger picture of financial inclusion.